Good afternoon, my name is Jordan Lambert, market analyst at Jobless Management. Gold is showing remarkable resistance taking into account the positive US non-farms last Friday, and now we have received better than expected US retail sales and jobless claims. We received that last night. Yes, there has been some selling after these positive numbers, but we've also clearly seen some steady demand after the bout of selling, showing that the bears are struggling to dominate this market. As I mentioned yesterday, there are various opposing forces impacting gold at the moment, including the forthcoming withdrawal of stimulus, which is causing a lot of volatility, and also concerns regarding global growth. So this is bearish for gold. These factors are rather bearish, but at the same time the uncertainty surrounding global growth, namely China, is providing support for gold at these levels. So we've got factors that are acting bearish and bullish at the same time. Technically, gold is pretty much the same as yesterday, and that is range bound with any trend ending rather quickly. I'm just looking at the 15-minute chart now, and I've just drawn out some resistance and support lines. The resistance lines are the yellow lines and the support lines are the green lines. And for traders who cannot wait for a breakout of the triangle pattern that I drew on yesterday on the daily chart, which is here. Obviously we are quite far away from any breakout to the upside or the downside on the daily chart from this triangle pattern. So for traders looking for shorter term opportunities, for traders who are eager to get involved in the market, the most appropriate tactic would be to buy at support levels and sell at resistance. So that is probably the main tactic anyone can use at the moment. Before you either sell at resistance or buy at support, assess why price is actually moving in that direction. If there's been a change in fundamentals, or there is any news headlines that have flowed to the market, assess that first before executing a trade. And also try to incorporate candlestick information as well. Often if you are selling at resistance, if you can incorporate maybe a shooting star or a bearish candlestick before you execute a short, this would mean that you would miss out on a few dollars of extra profit, but waiting for the confirmation of a reversal is definitely worthwhile. So be aware of that. And also I wouldn't advise using this trading strategy during economic releases. So be aware that we do have US producers price index tonight. That's at 8:30, and also we have the US consumer sentiment, which is at 5 minutes to 10. So I wouldn't advise trading this strategy at that time, because if you are trying to sell at resistance, for example, price could easily just force through resistance and keep going, and you'll be in a losing position. So try and trade around support and resistance when the fundamentals remain the same and there isn't any news flow. And also you can use the RSI indicator to signal when the market has become overbought or oversold. If the RSI rises above 70 and then dips back below 70, that indicates that it has become overbought and it is now in ready for a reversal. But again, only trade this if the fundamentals haven't changed significantly. Thank you very much for listening to me. I'll speak to you again on Monday. We have a fantastic promotion for new accounts at the moment. If you are interested in checking out the details, you can visit our Facebook page or you can visit our LinkedIn. Alternatively, you can visit the website Jobless Management. The required links are below this video. Speak to you soon.